Good morning, traders. Are you guys ready to go ahead and get right into pre-market prep? We got a great show. Of course, no rally yesterday. We were looking for it. We saw what happened. At least I was looking for it. Looked like Dennis might have been right. But like always, we got to be flexible, right? We'll definitely stay with the views of the market. We'll see today. We'll talk about earnings. We got so many earnings stocks. I got like 6 to go through at least. And there was hundreds yesterday. So let's go ahead. We got a jobs reaction today. Funko getting a steak. We got Blue Putnam on today. It's a great show. You guys start us up with a thumbs up and let's get it started. Welcome to Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, how we doing, guys? Good morning. Let's go ahead. Let's get it started. I got Joel Elconin and, of course, Dennis Dick in the house. What's going on, guys? Dennis, first, did you enjoy some hockey last night? There was no basketball.
I always enjoy a little bit of hockey, and I like it when the Calgary Flames lose because I'm an Oilers fan. So Calgary losing 2-0 to Dallas was solid last night. So solid results, big games tonight. Obviously, the Oilers go down to L.A., 10 o'clock tonight, so I'm going to be tired than Saturday morning because I got to stay up late to watch these games. I wish they weren't 10 o'clock starts, but what are you going to do? Your team's playing, you follow your team, you got to watch the playoffs. So
yeah, it's the weekend. It's the weekend, Dennis.
Yeah.
It's
not only hockey, though. We got something else. So we got a little special surprise for you guys later at the close, but Joel Elconin is going to give a little bit of a sneak preview,
of the Derby. The Derby article is done. Okay. We're going to start a little early, Mitch. Can you start at 3:15?
Oh, we got it. We'll see you guys
first of all,
at 3:15.
You guys like my shirt?
What we got there? Let me put you full screen here.
It's what a Father's Day gift I got. It's American Pharaoh, 2016 Triple Crown champion. Yeah. Yep. Nice. The girls got that for me. So 3:15, I'm going to reveal my pick. I'm going to give a little sneak preview. I mean, the favorites are looking sweet, and I'm going to show you why. But I'm going with the long shot. I always go with the long shot, and I'm going to make a personal guarantee that my horse, whatever I pick, is going to do better than my pick last year.
Yeah, you did bad last year, didn't you?
Yeah, second to last.
Oh,
he got knocked out of the gate. The guy, he almost fell off the horse. You guys don't believe. See, that's the one thing about the markets and also like horse racing is like when you're toast. Like sometimes you get filled on an order and you're like, oh man, oh boy.
Yeah,
when you're watching a horse race like that, and he hit 2 horses. And the jockey was like, fell off the horse. And I right away, I was like, I ripped my ticket. Well, you don't rick up tickets now because you have to do everything online. But enough of the sports world.
Let's go. Let's get into the future.
Spurs are down 1875. I mean,
before everybody gets
that was kind of a silly last 10 minutes. Dennis, we talked about that. 40-point rally in a minute and a half.
There's a lot of silliness in this market everywhere.
Okay. Yep. Did you see I called it the Led Zeppelin market?
The Led Zeppelin market.
Dazed and confused.
Oh, I think that's right, actually. That's a good analogy here.
Yeah, that's
we're going to be more dazed and confused after 8:32 when we get the jobs number. Because this is one of those markets that'll find the silver lining for the Bears.
I don't know.
I think either way, they're probably like, oh, the jobs. Oh, well,
let's dive into what we saw yesterday, right? Tech takedown, the second worst day of the year yesterday. And I got to say, the light isn't going green anymore, guys. At least in my background, it isn't going green anymore. I'm still in the red mode. I'm back to it. Some people are like, Mitch, but you were bullish this morning. Well, that could easily change, right? There you guys have it. Turn around from there. And what did you guys see out there?
All right. Well, first of all, I wish I could we could rewind and the pre-market show from yesterday, because I got on with you and I was having a little talk with you about the market and things. I'm like, Mitch, pick a number, because pick a number. I go, pick one number. And I wanted him to say like 4,300 into SPOOs, and he looked at it. I mean, I had this line up here. I just didn't draw this in for, like a couple days ago. You had two tops there last week, and then boom, you got
Wow.
up there on
Kissed it.
Tuesday. You never had a shot at it in the regular session yesterday. You would have had to been a pajama trader to get that 4,300. And then Dennis, and then you came on, Dennis, and Mitch was talking, and he was talking about the Fed, and Dennis was like, I that's above my, I don't know. I don't understand all this Fed stuff. Whatever. I think the market is going down.
I don't think the market understands it.
Yeah, it's so complicated. But anyways, we spent a little time above the close. The close was 43 and a quarter. So that's my number on the upside. I can't get positive as a market until we get above 43 and a quarter. Pre-market low is above the low from yesterday. Two lows to keep an eye on. The low from yesterday, the second lowest low of the year, 99 and a quarter. And then that Monday's low, let's hope we don't see that today. That's at 40.56. Crude, still worried about supply here, up to 12. Oh, back at the 50% retracement. That's been a while at 111. It's up $2, 110.30. Gold in the green by $7, 1882.70. Silver, let's call it flat, 22.40. Bitcoin, bad day for Bitcoin yesterday. Now we know where the resistance is. We'll have to find support here, but until we get above 38K, man, looking for more downside in Bitcoin and Ethereum. That broke support too. Actually, he did it the day before. So yeah, that trading down $45 at 26.84. And Spoozy just chopping around here, trying to find a home in the 41.20 handle. Yeah.
It's a choppy market. Wouldn't you know it, right?
We got information that's going to be coming, obviously, jobs numbers. We're going to have CPI data next week. So chop is the only thing we can guarantee you is there going to be continuous chop here for a while here now. I mean, the VIX is elevated above 30. It's always good trading environment. Not so good on the investing environment because obviously, you have those gains, or the swing trading environment. It's not good for either because, you're chasing and you're like, oh, trend's going up, and then it pulls zero, I go from under it. Yeah. Bait trade continues to work. We'll keep preaching it because it continues to work. So bait them.
Like it calm down. I would like this market to, we always talk about that.
That's not happening anytime soon.
No.
I pointed at the average true range yesterday for the SPY up past 11. And I mean, when's the last time you've seen that? 2020. And before that, you had to go back before 2017. So, I mean, this is volatile markets, right? This is how it gets. Let's go ahead. Let's take a look at all the earnings. Let's just jump right in. There's so many to talk about.
Yeah, there is.
I'll try to get through as many as I can through here. I put a lot on the list here. Let's see if we can get through all of them. You guys test me in the chat, but smash the thumbs on up for us covering these. I want to see 800 likes today, guys. 800. I'm testing
800. Okay, I'm 160. I'm 160. I like the show. All
right, let's go. Let's jump into I think, of course, the one that everybody was looking at was Square. Let's go to Square. Last night, Square EPS at 18 cents per share on an adjusted basis, down 56% year earlier period. Analysts had projected earnings of 20 cents per share. Square said revenues dropped 21% to $3.96 billion as Cash App transactions for the digital cryptocurrency Bitcoin fell, and analysts had predicted revenues of $4.14 billion for that Cash App transactions. Results did include the recent acquired consumer lending startup Afterpay. So there you guys see it. Square up a little bit. I mean, it's holding on a little bit.
Poster child for what I was just talking about. Chop, chop, chop. This thing went up on the report, then they tanked it all the way down to 91. Then they bought all the way up to 104, and they decide to take it back to 95, and then they take it up to 108, and then they're leaking it here again. So, I mean, this is the market that we're in. It's not even in the overall market. It's in individual earnings companies, too. Nobody knows how to price anything in this environment. All they know is they're selling reps every single time. That continues to be the case. The good earnings get sold on the rips. The bad earnings don't get bought on the dips. It hasn't been a good, strategy to be buying really anything after earnings because the good reports are up and then you're losing, and the bad reports are down and then they continue to leak. So it's been a tough play to just buy anything after earnings. I'll say that.
Well, you wanted to buy this one, and I told you to hold on. So, are you mad at me here? You did get a chance in the pre-market. You did take out a pair of lows. Like if you were just saying, "Hey, I want to own this at a little bit of a discount," 93.12, 93.65. That's a pair of lows. It went down to 91. Got a bounce. Tough here. You got a lot of room up to yesterday's high. I'm calling inside day. That's what I mean. Unless it really gets the hops, I don't. I could take out 104.14. I don't think you're going to see that 93.12 low. I think if you want to try and buy it on the cheap, if you feel like buying it, maybe try and get that close at 95.55. But man, just kind of inner range and double bottom, no double tops to mention.
All right, let's keep it flowing. We got lots to talk about. I think how did let's just take a quick peek. How did PayPal react off of that?
You read my mind, man.
Just
I'm
a
little
little right?
choppier.
We love our relationships. We pay attention to those relationships.
And again, a chance for a little education. When PayPal has already reported, the response will be muted.
Yep.
Because we already know the PayPal earnings, where you get in the case where PayPal was influencing Square, because we don't know Square's earnings already. But these two stocks do move together. But expect a lot less volatility here because we already know the PayPal numbers. They already reported.
All right, so let's transition. Let's go to Zillow Group here, the online real estate marketplace. Saw shares tumble about 10% in the after hours, despite a beat on top and bottom lines here. Quarterly earnings of 49 cents per share, beating the estimate of 27 cents per share, and revenues were at 4.26 billion, beating the estimate revenue of 3.39 billion. Hey. A beat on top and bottom, but still going down.
$212 back when everybody had to own everything in February of 2021. It's down 85% from the highs. Fun times to invest. The real estate bubble is going to start to burst. And, I've been talking about this, but again, talking to my real estate broker there, my buddy Jeff, he says, like, when he's looking and just talking with his customers at this time, it's like he's got people calling every day to sell their houses and not a lot of people calling to buy. And it's completely flipped. People are scared. People like that have listings out there are dropping the prices because they know in this area, I'm an hour from Toronto, so he's servicing some Toronto area here, that the prices are coming down, and they're coming down hard right now. That's a lot to do, some with the stock market, but it's to do with higher interest rates. That's the direct hit. Boom, direct hit. Interest rates go higher, variable rates go up, people have less money to spend, real estate prices come in. This is what the Fed wanted. This is what obviously Canada follows the Fed. Same thing's happening there. Real estate bubble is bursting.
Yeah.
Yes, and I like it. I'm licking my chops.
Are you looking to buy something?
I mean, I'm flat.
Well, you got a house. You live in a house.
Well, I mean, I got a house, but I meant I was double long with that, that other property, and I was gonna, get a bill, and thank God I didn't do that. I wouldn't still be married now.
No, exactly. I'm pretty sure I built my house right at the top. So I'm very good at timing stocks. I'm not very good at timing home builds, apparently.
But now you'd be stuck. You wouldn't be able to do it all. Which one do you like, Dennis? You like the Z or the ZG or these stocks?
Whatever you want. They're both toxic.
I don't even know what to talk. What are you gonna say? They're at the pre-market low.
Mm-hmm.
I don't know.
People just keep buying though, and they think, and it was a great tweet from somebody that just I read it yesterday, but I was like, talking, like, well, how bad can it get? Where these stocks were, and then he says, well, maybe I need to stop thinking about where they were, because a lot of these stocks should never have been at these all-time highs. And I'm like, bingo, that's how you got to stop thinking. Zillow should never have been at 200. We shouldn't be thinking of Zillow as, it's going back to 200 eventually. It will probably never see $200 again. And it can never say never, because maybe this raging bull market finds legs somehow. But $33 a share. So for the stock to go back to 200, It's got to go up like 800% from here. That's, you know, a lifetime of normalized earnings, or a lifetime of normalized stock market gains, 800%. So you can't think 33 to 200. It just doesn't do it that easy. The stock goes down 85%, needs to go up 800% for you to break even. That's the funky Wall Street math. Fun with math.
Yeah,
I'll give
it's
you a
interesting.
monthly. I mean, if I doubt anybody in the chat is going to be trading this, but if you are, good luck. 29.42, your April 2020 low.
Yeah, we'll see if we get that demand destruction. You know, the Fed, at least from right now, not pointing like they want to stop raising the interest rates. So at least the
I'm
environment.
just hoping that this number doesn't come in like really bad,
Oof.
because then we're gonna be.
Yeah, the jobs number is going to
If
be
we got a
It's a
bad
CPI number that's really
I
going to
know,
be
I
the
know. Yeah,
important
I
one
agree.
next week.
Yeah,
So
yeah.
everybody's
CPI.
waiting on the CPI. We're going to be choppy until the CPI. And
Be
again, if
watching
the
it.
CPI comes in hot, Katie bar the door, we're in big trouble. If it comes in, and I do believe we're at peak inflation right now, but I don't know if it's going to show up in the data yet. I don't know if it's going to show up this month or next month. The data lags. So if it shows up too hot, this is going to just kill this market. If it shows up for whatever reason and is softer than expectations, they will have the biggest rip roaring rally you've ever seen. So this CPI number next week means everything. Jobs number will move the markets, but it's not going to move like the CPI.
Yeah,
I loved your consistency, Dennis. I love it.
I'm staying right with that.
Dennis,
You're going to see chop until that gets CPI. It's the event that is going to dictate the entire course of the next big move. 100%. It's either going to be tanking or it's going to be going up. But you got to be on that, and that is one time. If it only moves 10, 15 points, it's one time that maybe you should be chasing. But we're going to see the CPI next week.
If it's bad, are you going to go to 25% cash? Or 25? Yeah, 75% cash?
Yeah, what if China
I don't know, maybe.
Lockdown hurt the supply enough that we got an increase?
I know. That
whole
whole
lockdown,
Twitter talk
all
about
of
the whole China supply thing. That's
the China supply thing
that is not good. It's not good.
The CPI, I think right now, I think we're in this real world right now experiencing peak inflation right now, but I'm scared it's not going to show up in the data yet. So, and I think I kind of tend to think it's not gonna. So maybe the number could end up being hot, and that would be troublesome.
All right, let's keep going. Let's go to another one here that reported last night. Let's go to Doordash. Let's check out the dash here. We've gotten a couple reports in this kind of industry. Let's look at that. Stock rose over 10% in the after hours, reported 35% revenue growth in the first quarter, a loss per share of 48 cents versus the 41 cents per share expected here. And revenues were at 1.46 billion versus the 1.38 billion estimated. A little bit of a bounce, a little bit of a dash.
Man, I'm torn on this one here too.
Yeah, I don't know.
Not really actually that torn. I'm not even that torn because 83, 84. I mean, what do you do when your stock pops 15% and 84 on 73? Okay, 13%. In this environment, you sell it. The numbers were fine, and maybe Uber and Lyft just had the bar so low that it was fine to get over that. It's been beat up. Some of these growthy names are not the areas that I would be looking to short now. I would just say that. Because a lot of these growthy names have been beat up so much. The valuation makes sense on Doordash? Probably not. I'm not sitting there looking at the fundamentals of it anyways. But again, same story. Rips are sold. Sell the rip, working better than buy the dip ever did.
I just don't understand the whole concept of getting McDonald's from Doordash or something. I mean, I don't understand.
You can't leave your house. People who
I mean, yeah, you could go to the store, you could go to Kroger's and cook stuff up and have it. I'm just out on this stock forever. No matter what.
It will not touch my long-term portfolio. For trades, we trade everything. We don't care. We don't discriminate. We trade everything. As a long-term investment, it's all about the fundies. I'm not sitting here chasing, growthy stocks at unreasonable valuations.
Yeah, I think this stock just came out in the wrong timing. If you look at that monthly chart, what do you see? You see it came out in 21, right? If this would have came out in 2020, who knows where this bad boy could have gone? But hey,
if you are trading this, throw out the high, throw out the low from the pre-market. if you're bullish, you wanted this thing, you got to take out yesterday's high, number one, first and foremost, 78.43. Then you got a little room up to the close from Wednesday. That might be a mirage, though, at 81.64. Coming back on the downside, if you're bullish, you got the old-time low. You got a double bottom to lean on. You got $70, 70.04 yesterday, 70.50 the previous day. So that's what you're leaning on. You're buying it here. $6, you're stopping yourself out at 70. That's a technical look at DoorDash. I've never used it. Have you ever used it, Dennis?
Never.
Hey, well,
Nope.
we're gonna have to get you guys to use it. I'll get you guys a free lunch, right?
Is
right,
it in Canada?
I think it. I
I
would
assume
think
it is,
so.
but
I would assume so.
I
but-
assume so, but I don't know. I don't even know if it's in Canada.
All right, let's go to a retail favorite, of course, Lucid reporting, guys. Let's take a look at Lucid. Loss per share at 5 cents. Revenues was at 57.7 million.
Punch.
Yes, I said 57 million, guys, not 500 something. 57.7 million. Net loss there of 81.3 million. Vehicles delivered in the quarter, 360. Vehicle reservations, more than 30,000. Lucid did say it was going to honor its current pricing for customers that have existing reservations now, as well as for new customers who make reservations before the end of May. But pricing will kind of increase 10 to 12% on various Air models, depending on the trim level. So they're saying prices are going up.
$30 billion valuation for a company that delivers 300 cars. Crazy, though. Thank you. I said when this was $35, I thought it could go to $5. It's at 18. You can rewind the show. That was back in like January. I thought fair value might be around $5. So we're at 18. We're over halfway there. I don't know if it's going to 5. But I'm not buying it. Is there going to be rip roaring short squeezes as it goes? There always is. Nothing is easy on the short side. They rip your face off lots of times. But I think when we look at this, I think unless, this is the next Tesla, the valuation makes no sense. And valuation matters in 2022. So I'm not buying it at 18 when I think it could go to 5.
Does just one thing on DoorDash. Do they deliver in the metaverse? Do you know?
Soon. If
Yeah,
they're
I
not,
think so.
they're going
I think
to.
so, Joel.
Maybe
I
you can
don't know
go
if there's any
to
customers
the,
in the metaverse anymore, though.
so maybe you can go to the metaverse Domino's and then just order your pizza, and then it shows up at your house.
There's a lurking buyer out here. I don't know who, she, what, where. Under $18. You've had 1, 2, 3, 4, 5, 6 lows back earlier in the month at that area, 1760 to 18. The fact that it got down there in the after hours and it bounced, it's unchanged. So 18, 7, under 18, good support. May not see it unless the market just croaks and rolls over. On the upside, I talked yesterday, 20 to me, two highs, 1992 and 2030. Boom, right there. It's good enough. Call it 20 to me. So 18 to 20 trading range for now. Gets above 20. Technically a little strength. Below, I don't know. You got to give it down to 17 and a half if on the downside there, but not interested in it.
Okay, we're going to do one number going forward because you gave me like 25 numbers and I have no idea how
I'm
to
going to give you
25
24.
numbers.
I'm going to give you
one
24.
number.
No,
One
I'll
number.
give as many as I want.
You can, but I only hear one.
I say
24, I heard
hold
this
on
one.
to 18.
I'd be a seller at 24. I'd be a seller at 23. I'd be a seller at 22. I'd be a
I
seller
never
at
mentioned
21,
that.
20,
It said
19.
18 to 20. Two numbers. Support
I'm a
and
seller of all
resistance.
those numbers. Just my
18 to
opinion.
20.
Just my opinion. Sorry if
Hey,
I'm wrong.
We know Dennis likes the frisky Fisker, so we'll see what happens.
How is that?
They announced
I do
a
like Fisker
high-end
'cause-
model to be released in 2023. I think it's called the
They're all
Rowan
bad, Joel.
Project, but
They don't
Just kinda
sell any
mentioned.
cars yet. They're all bad. But I do think Fisker has upside. It's because I have $3 billion market
we'll
cap.
see what happens.
Give me some upside, man. Don't start with $100 billion market cap and all the good stuff's priced in. Start small.
I'm going to give
Dennis,
you one number,
Dennis.
10.
I own zero Fisker because I
10.
don't own any of this stuff anymore. But I think there's a chance for Fisker to
You know
move
what?
higher. I think there's a chance.
Do they make
I'm gonna
more than one
invite-
car, or do they just make one car?
No, they're
Well,
gonna make
they
some
have
cars.
2 models right now, and they just
See,
announced
I
a
just-
third. So there's the Ocean the Pear, and now Project Ronin is like a high-end sports electric vehicle.
Oh, boy, that's
That
gonna
seemed
be
interesting. So
people are gonna love that. Yeah.
let's keep it going. There's two big reports that reported today. I'm gonna skip Fubo and MP for right now. Let's go to Under
Fubo.
Armour. Under Armour reported an unexpected loss in sales below estimate as the company's battling supply chain challenges and COVID lockdowns in China. This is why I'm a little concerned, Dennis, about that CPI number.
Yeah.
That those lockdowns in China, but loss per share 1 cent adjusted, earnings of 6 cents expected. Revenues was at 1.3 billion versus 1.32 billion expected. So unexpected loss and sales below estimates.
Stocks making new lows. You got to go. The good thing is I'm actually long UAA, but I'm short UA. So I have the perfect pair on, equal dollar amounts. So I'm hedged, completely hedged. I'll have to take, usually when I take these hedges off, I take them off when like midday and they're tight. Right now it's too wide to try to take it off. Why not? The one thing, if you're trading and you're doing like risk arb or whatever, when you get a good price, you're doing it after hours, you get a good price, I'm trying to take it off after. Leave it on. Because coming in 10 o'clock, then it'll be like tight. The spreads are tight and get out easier. So tough in, easy out. So
Nice.
I wait for the easy out around 10 a.m. There's a little risk arb trading for you there.
You're giving away a lot of secrets today.
Yeah, that's what you got to do. So right now you're looking 10-cent spreads, but you won't see that at 10 a.m. 10, 30. We'll wait till 11. Wait till it slows right down. It's okay. Your money's going to move around. It's like, oh, I'm losing thousands of dollars in UAA, but you're making in UA. So you're okay.
Which one did you put on first?
I can't remember. You're asking me. I made like 100 or
too many
50
questions
trades last
there,
night. I
Joe.
don't remember which one I put on first. But.
All right, 828. I do want to go ahead and give Dennis a little bit of a warning, and just in case he wants to go wide.
Yeah, I'm going wide.
I'm sure he's going to go wide.
Right cancel.
I don't think Joe will be too short of comments for Draftkings. So, Dennis, while you're away, we'll probably talk Draftkings, but I don't think Joe will have too short.
Yeah, I could wrap one number.
Let's do Draftkings right quick before we get these numbers here. Just to kind of put out the jobs number that's expected. I have expected is 400,000 jobs added in April. Looking at a slight kind of takedown from the 431,000 that were added in March. The unemployment rate is expected to decline 0.1 of a percentage point to 3.5. Just want to put the expectations out there. Now let's talk a little bit quickly about DraftKings. DraftKings is surging. Friday on online gambling, it raised its full year guidance. Q1 sales of 417 million beat the 414.36 million estimate. EPS was just slightly a beat there at losses of $1.14, beat the expected loss of $1.16.
Not really buying it here. You got close to 16. Man, we'll see what happens with more liquidity, because I'm going to call 1575 a pretty good number. 3 highs in that area. Let's go here. Let's go to the 1 minute. Okay, let's make the chart nice and big here for our jobs number. Here. And where we are, see if anybody jumps the gun. We don't want to watch DraftKings. We want to watch the spoos. We're right at mid-range on the session.
Are we going to jump?
Where we are catching, there's some early buyers here. We got a little pop, a little more of a pop, a bigger pop. We're coming up on the close. The close is 43.25. This is the moment of truth. Can we get green on the session? Not yet.
Got numbers here. I'm going to go ahead and put it up here. USA non-farm payroll at April, 428,000 versus 391,000 estimate. Prior was 431,000. So there you guys have it. Looks like we beat there. Not bad, and almost beat the prior months of 431,000 there. 428,000. Looks like we're getting a little bit of a rise off of that number. Let's see what other numbers come in here. There you guys see it. I'll put it up here. USA unemployment rate for April, 3.6 versus 3.5% estimate. Prior was at 3.6.
Okay. All right. So we're not, the recession doesn't start tomorrow then, right? Okay.
I don't know. Not tomorrow, at least.
Not tomorrow. Price action. Price action. You saw the pop. We did make a new pre-market high. That's the good news. What did I have? I had 49.5 as the pre-market. We blew through the close. It paused there for like a nanosecond. And then we took out the pre-market high by like almost just a little over $2. And then that's it. Now we're just back on the close. So kind of what I was afraid of here. You had sellers on the pop, but you're not really having you're not having follow through, you're not having buyers here. We just lost the close. We're back in the red. I think right now 41.30. That's kind of where we emanated from here. Let me go to my 1 minute chart. So we ended we started the 8:30 bar at 41.30.50. So let's hold 41.30 and we got a chance to rally here. That's what I'm looking at in the S&P 500 index futures. What do we expect to move? I mean, what moves up? Banks caught a little bit of a bid. I would imagine these big stocks pretty much follow the S&Ps. Bank America caught a little bit of a bid. Tech, this is a little concerning. There doesn't seem to be an appetite for tech out here, and that got smoked yesterday. A little pop in Microsoft. That's still red on the session. Google's still red. Amazon's still red. The only top component I haven't, well, Apple just sneaked his head above green there, up 23 cents. Pretty, but a benign number. I don't see a lot going green yet. Oh, ExxonMobil's green, 91.17. That's up 86 cents. I got a little bit. Oh, I got to get the pre-market action in here, but we're up for now. I guess that's the only way to put it. Mitch, what's your reaction?
I think like a nothing burger there. It didn't really move too much up on the number, even though I thought you'd get it closer towards maybe 400 than 428,000. So that's a little bit higher than expected. We're talking about almost 40,000 over the expected. So it looks like it should point towards the upside. But I mean, honestly, in this market, I'm not going to say that anything should or shouldn't go in any way. We got to watch the price action. And right now it looks like kind of more unchanged to me than going up or down.
I think and we mentioned this before the number came out. Like, you just didn't want to see like a bad number, and then you'd be like, oh man, the recession's already here. So I think this was just kind of like a sigh of relief number that. And like we said, also, it's the CPI next week. That's what they're focused on. But should we bring in our expert economist in here to get his? Yeah.
No, since I don't have opinions, let's bring on someone that might have some opinions. You guys might have heard of him before. He's just this guy that we bring on almost every time when we got some important economical data. Let's go ahead. Let's bring him on here. Blue Putnam. It's that time, and he's I think the only guest we have a really good intro trailer for. Let's bring him on.
Okay.
All right.
I like that. Blue, man, you're an important guy if you get an introduction like that. How you doing, Blue? How's Chicago?
Chicago's fine. Of course, I'm down in Washington today, but it's all good.
Okay. All right. First, let's talk about the ridiculous reaction on Wednesday to Steve Leisman's question. Did you know that? Did you know that was a Steve Leisman rally?
I was watching that thing. It was amazing.
So
of course, I took my neck brace off for this show, but okay.
Whiplash, exactly. Did you take? I mean, we look at the Fed plot with you, and we talk about stuff, and I know Mitch has mentioned 3/4 of a point a little bit. I mean, was that something that you had in your notebook or your blue book? We can call it.
Well, there's been enough talk about the potential of 3/4 that it was a great question to ask. And there was a little bit of 3/4 probability, built into the market. And so, great question. And that the answer was the surprise that, no, it's not on the table. We're hardly thinking about it.
Okay.
And so, the market, well, we now, hindsight's great. We know the market overreacted. Actually, I talked to a few people that had a bad day, and they slept through from Wednesday noon till Thursday noon, and they didn't think anything had happened.
That's you know what I put that in my wrap yesterday. That before that question asked, the S&P 500 index futures were trading at 41.45. Okay, and then rallied 150 points, and then yesterday the close was like 43 and a quarter. So even though we went up to 4,300 and down back to 4,100, to me the market was still undecided. So all right, so you're giving a little credence here to the Leisman rally here with the 3/4 point, and we didn't really think that was much. So what else? I mean, he wasn't necessarily hawkish, right? Is that what the market liked, and that's what the market interpreted?
Oh, you muted yourself, Blue, I think, on accident.
Yeah, you got muted, Bluted.
There you go.
Okay.
Anyway, we are, Jay Powell is very, very careful. And he's careful to stay data dependent, But the target based on the current data, again, he was very clear. We want to get to a more neutral policy. Most people think that's around a 3% Fed funds rate. That's exactly what the Fed funds futures markets have currently priced to get there, in the first half of 2023. So, the market has priced in pretty much what the Fed told us, but there was some interesting things. The technicalities on how they're going to shrink the balance sheet.
There you go. Mitch is taking over now. Go ahead. Go ahead,
Oh,
Blue.
I'm excited, Blue, because this
Go
is
ahead,
what I
Blue.
was focusing on.
Go ahead, Blue.
I don't know if that's what you're kind of referring to, but I did see a changing of the tune there from, let's say, the minutes that we got from the March meeting that stated 95 billion a month, and now they're pointing towards 30 billion. Is that what you kind of referring to here?
Yes, they slowed it down a little bit, and I think the interpretation that some analysts made of pointing to 95 billion was not quite right. What they're doing is that they're saying we're going to let X amount. They have a cap, like 30 billion of treasuries run off, and if anything more than that runs off, then we're going to buy them back. The thing is that it's in treasuries you probably will get that many running off, but not in mortgages. Mortgages aren't so clear because mortgages are determined in part by whether people refinance and prepay. And with interest rates, mortgage rates going up, well, you can forget about refinancing. Nobody's going to do that. So, and then you've got the housing market doesn't have a lot of volume right now. So, I think the maturity of the mortgage portfolio will actually lengthen a little bit. So, I'm not even sure we're going to get the full amount.
It's one thing that we're definitely going to keep watch. I agree too that you might not get the full amount. One of the things that stated, and I think, in the minutes it said up to 95 billion, but then specifically the wording was cap to 30 billion. Doesn't
That's
necessarily mean that they have to get there, right?
That's the way I took it. And now they do have other tools, and they were absent from the technical release. For instance, the Fed gets north of $100 billion of interest every year. I mean, that's what happens when you have a $9 trillion portfolio, and if they don't reinvest that interest, then they could shrink the balance sheet a little faster than they're currently planning. So they have some tools, but what they did tell us very clearly is they're not selling. And, that would have been the shock and awe had they decided to actually sell something. But they're just going to let it run off. And they're going to let it run off at a pretty fast pace for them. But maybe not quite the trillion in the next 12 months.
Yeah, I mean, that's what I felt like. I feel like they were trying to give us like a little bit of that they were more rapid, but now it looks like a little bit more like a soft bottoming kind of action. Trying to ease up a little bit. Did you get that feeling a little bit of a change from, let's say, March? to now?
Yeah, the minutes, well, they were debating it when we got the Fed minutes last time. So a debate is very different than a technical press release telling us exactly what's happening. The other thing that's going on in the last couple of months, and we don't have the data on this, so it's just an idea and an estimate. But, we've had an extremely strong dollar against both the euro and the yen. And the yen, the Japanese, they have $1 trillion worth of U.S. treasuries. And if they want to slow the depreciation down, they would be sellers of treasuries. So that's another aspect that's shown up just in April and May. That's a fairly recent one. And then we have in China, that economy is clearly slowing down very rapidly with the COVID zero and so forth. And that currency in the last 2 or 3 weeks has been very, very weak. Now, that's not a Fed thing. That's a China thing. Just happens at the same time. But they also might choose to slow that depreciation down, and that would make them sellers. So, there will be some sellers potentially coming into the market just because of the strong U.S. dollar. And by the way, that's going to affect the data going forward on prices, inflation in the U.S. Now, this happens with a lag. But the stronger the dollar and the longer it stays stronger, it reduces import prices, or they don't grow as fast. So it is actually helps the battle on inflation. And again, I say that's not about next month's data or anything, but when you look 3, 4, 5, 6 months down the road, you do start to get a little impact from the strong dollar, and it helps reduce inflation.
We're on the line with Blue Putnam. He's the chief economist at the Chicago Mercantile Exchange. Blue, we've been talking about, and Dennis has really been hard. He's going to bank it on that CPI number, and he's hoping that he's seeing some signs that we're at peak inflation. Now it takes some time, to work it through the numbers, to work through the system. Are you seeing any signs of peak inflation yet, or just a little bit? Maybe we're going to need a couple more CPI numbers.
We're seeing a little bit of sign of maybe a peak in the core, but you better be careful with the full CPI that includes food and energy. I mean, oil prices have gone back up. Natural gas prices are up. Wheat, corn, soybeans are all way up. So I wouldn't... Now, I can tell you why people are calling for the peak.
How come?
They're looking backwards. They're looking at comparisons from 12 months ago. So what falls off the back end has an equal weight to what comes on the front end when you do these 12-month comparisons. Okay, so that's arithmetic, and frankly, it's worthless. Because we're looking forward. We really need to be looking at those monthly CPI changes, and they've got to show some improvement. And I think they will, but not in the next couple of months. So we'll just see how that goes. But, it's too early to, this number is extremely uncertain.
Excellent. Definitely going to be on watch. I think CPI is definitely on everybody's radar. And like you mentioned, Powell did state about how the core might be dropping a little bit, but he didn't say overall inflation coming down just yet. And so I think that's something definitely that we'll all keep on watch to see what happens with that CPI. Of course, I agree with you. Food and energy is one area that I'm definitely focused, especially energy, not just only in, here in the US, but energy in Europe, potentially causing some issues to transfer over here.
That's right. And food in the rest of the world is a huge item for things, and so you've got all of that going on. One of the things we have to watch is consumption and how people spend their money. Part of the supply chain issues were caused by the shift to spending on goods. And so we're watching to see if we shift back. Now, we know there are plenty of people flying around domestically and so forth, and the restaurants are up a little bit. But we are really not fully back. And so we've got to watch the composition of consumption. And if it starts to shift more back towards services and a little less for goods, then that, 2, 3, 4 months down the road, you're going to get a little improvement in the goods prices. And it's the goods prices particularly durable goods that have been driving this thing, whereas services aren't up that much in terms of prices.
Triple D, I see you're back. You got any? You got any
Just
questions?
bringing it back, like, and I've been calling that. I feel like right now, and this is a good question for you, Blue. I feel like we're experiencing peak inflation at this moment in time. How long does that take to show up in the CPI data? If we're experiencing peak inflation today, and we think prices are going to start to come down from this point, how much does the CPI data lag? Like, is it a month to pick that up? Or is it
no,
like
nothing happens in a month in that kind of data.
Yeah, there you go. So that's
you're talking about 6 months, and you know, one data point
for the data to pick it up, it would be 6 months later.
Well,
like, so let's just say in a real world, that hypothetical situation, prices are peaking right now and they're starting to come down a little bit right now. How long before the CPI data picks that information up? 6 months?
Well, when I say 6 months, I mean it's 6 months before you'll and other people will be convinced that it's coming down. The data shows up when, you know, I mean, they'll pick it up, but I mean, it's going to be super slow in terms of how it works its way through the economy. So, you know, when I'm talking about 6 months, I'm talking about when I'm confident that we've passed the peak and the data's really changed. And 1 month, I mean, this data is highly volatile and more volatile than it used to be. So, you know, you're going to need 2-3 months, even if you see some change to show up. But the whole thing with food and energy, let's go back to that. That has a lot to do with consumer confidence. Food and energy are not included in the core that the Fed targets, but they are primary in what consumers feel. And so the consumer confidence is going to feel the food and energy prices, and they're not going to, I mean, you can tell them that the CPI has peaked. And if they're paying more for gasoline and more for milk and things like that, they're just going to think you're a bad economist. So I try to stay away from those things.
Can't blame you for that. You know, no one likes their milk going up. So we'll definitely keep watch on what happens here. Thank you for joining us, Blue Putnam, the managing director and chief economist at the CME Group. I appreciate you coming on like always. And it was a great pleasure talking to you today.
Did you track Leo down yet for me, Blue?
Uh-oh.
Leo will be in Chicago for the MSRI, Mathematical Science Research Institute Award that CME and MSRI give to a very notable professor in applied finance. So watch out for May 16th in that award.
Yeah, I was runner-up.
Yeah, Joe. Runner-up, right? Runner-up.
Thanks, Blue.
Thanks, Blue. Have a good one. All right, guys, let's keep it going here. We still got some earnings reports to go to. We're back down to 412.
Yeah,
we went up there for a second, though.
It's a fade trade, man.
Yeah,
it's just this. This is, we're going to be like this. If you're going up and you're chasing, like, oh my goodness, we just took off 20 handles, I got to buy stocks. No. Slap yourself in the head, because that's not the way this market works. Give yourself a hit just like that and say, knock it out, because don't chase anything. We literally, people who just chased that 20 minutes ago are already down 20 points. So, I mean, this is just the way to lose money in 2022 is to chase. Oh, I missed it. Everybody 2 days ago on the Leesman rally. My Twitter stream. How's that 50% cash feel, Dennis, now that we've rallied 100 points? They're all silent yesterday, though. Silent yesterday. And I mean, this is what it is. Chasing in this market equals losses. I'm going to just keep saying it. 2020, chasing worked. Chasing typically doesn't work, though. And in 2022, it especially doesn't work. So you got to stop yourself from chasing moves. Again, so Blue scares me a little bit because he thinks that CPI data could lag a lot. And if I feel like I'm experiencing peak inflation at this moment in time, that might not show up in the data for a month or two. Yeah. So
he said 6 months, Dennis. He said 6 months.
I think he's meaning like that he's confident we got to see multiple times.
Yeah, that's the other thing I
you're seeing like, okay, this isn't just a little tick down. Yeah. So, but I don't even know when it shows up. So I'm like, I know, you know, it lags. They're collecting this data. They're not collecting it in real time. They're not that good. So, I mean, there's definitely a lag, and it's probably a month. But prices, you know, I think prices haven't even really started coming down yet. I feel like we're at the peak right now. This is what I think. We're at the peak right now. and we're going to start to tick down because I see the demand destruction happening. And I know people don't want to hear those words. I know people say, well, there's all kinds of stuff still going on, but I'm seeing it. And, from friends, I'm seeing it, delayed. Another buddy had a renovation project, completely killed the project because he got the quotes. He's like, it doesn't make any sense at these prices. That is happening. That's why all these people who are bullish home builders right now, that's happening, man. They're getting these, quotes back, and they're like, well, I budgeted $300,000 for this renovation. And the quote comes back at them at $500,000. And they're like, I can't do it. I can't afford it. Yeah. So, I mean, this is, what is going to happen. What's going to filter down through is the projects that are already in there. They take time. There's 6 months, you've already started a project. I was a year and a half on a build. I'm in the middle of it. I can't stop now. But I was going to build a shop on my property as well. I said the shop is on hold because I'm going to wait for prices to get reasonable here before I start another project. So, I mean, this is where we're at, and this is what demand destruction is about. But that takes time. To Blue's point, that's going to take time.
I know.
So, I mean, to show up in the inflation data, because prices are still raging. So it could be a bad number next week. That's why I'm not buying ahead of this number. I'm curious on the number. I think the next month, maybe, but I don't want a full month of like, oh, everybody still thinks we got raging inflation because they can't look outside. And we do. Inflation prices, the prices are nuts on stuff. We called this, the inflation, we could see it happening around us. Just through my home bill, I kept saying prices are going up on everything. So it's a reason I raised to 50% cash in the first place. I don't think there's any reason for me to get off 50% cash until we start to see it in the data.
One thing that worries me though is, I mean, you're looking around at your circumstances and stuff, but I mean, the whole China thing. I mean, the lockdown. I mean we get a lot of stuff from there, and every time I see these maps, have you seen the maps of the ships waiting to go into port at Shanghai? I mean, so that's a negative, and then and we don't talk about it, but there's still war going on, and that is, that's obviously affected the oil market. I was glancing at some of the commodities, and wheat has been in this crazy consolidation between 1024 and 1152. But corn, that's not a bearish chart yet. I mean, soybeans, beans in the teens. These are not bearish charts.
You've been hearing farmers talk about how they're going to alternatives for fertilizer. So that just shows me that more and more they're getting more and more expenses that are higher and higher. What ends up happening, they got to pass it to the consumer, right?
Well, they do.
I mean, at
the
the
ones
end of the day,
that can pass it through, pass it through. The ones that can't pass it through are in trouble. Yeah. And I think you're seeing that in the automotives. They're trying to pass through these increased steel costs. They're trying to pass through these increased material costs. It shows up as a $90,000 F-150. And people are like, no, thank you. So there's certain things that we always, you're going to go buy your loaf of bread. You're going to drink, you're going to go buy your milk. You're not going to stop. Those costs will get passed through. But there are big ticket items. Bring up restoration hardware. Try passing through these costs, man. And this is demand destruction at its finest. Oh, yeah. I mean, here's a stock that has been cut in half, basically, in 2022. Big ticket furniture items, expensive. This is stuff you don't need. Do you need your $5,000 antique-looking couch? I mean, Williams-Sonoma, same thing. You can clearly see big ticket items, stuff that is discretionary, something that people don't absolutely have to have, is getting hit. People look at Williams-Sonoma and say, well, it's trading with a P of 7. How can I go wrong? Demand destruction will make that go wrong if that really does happen. And you see it. I see it happening in the real world. It's going to continue to happen. It's common sense that people are going to have less money to spend. We continue to say it here. That's why every rally gets sold in stocks. There's certain things. You're not going to give up your iPhone. You're not going to give up certain things. But the big ticket stuff, don't buy these companies that are selling expensive things.
Oh, boy, we are rolling over.
Hey, yes, we are. Yes, we are. We're looking pretty weak.
That pre-market high just took it out the close, man. People just want out at the mark. Hey. After that 43 and a quarter mark, now that's a long ways away. So looks like we're going to be in for a rough day. Do we I know we skipped. We talk economics
go
here. We
back.
look like we're pretty smart people. When we have Blue
Love
on,
Blue.
yeah,
We
he's
got some
good.
more earnings reports we can go through. Let's go to Fubo. Fubo. Streaming. Who's paying for streaming out there? Let me know in the chat if you guys got Fubo. Quarterly loss here of 89 cents per share versus the estimate loss of 63 cents. So targeting positive cash flow and adjusted EBITDA in 2025. Revenue rose 242 million from 119.7 million last year. Expected was 243 million. So they're experiencing pressures on adjusted contribution margins due to slower ad sales growth.
You want a number in this one, Dennis? How about 0?
Yeah, I'll give you 0 as well.
Okay.
So that's just our opinion.
No.
We know,
I think
nobody
get
knows
bought.
anything. When we give, targets
think
or
it'll
we
get
give
bought.
ideas, I think Fubo could be a 0. I'm moving on though. That's I'm not touching it. It was an awesome story in 2020. And Mitch, you were all over this one. We made some good money riding the wave in 2020. Like it moved up and it was hot and I sold way too early. But I mean, the story is completely broken. The company doesn't make money. I don't know if they have a path to profitability. If your stock doesn't have a path to profitability, I think in this market you sell it.
Yeah, I think it's going to be something that's definitely going to fight. And just to kind of state and add to what you say, JP Morgan added to exactly what you said, that they don't see a path to profitability.
Yikes. That's not good news coming from JP Morgan because they know a little bit more than I do.
Yeah. All right. So
they all want to talk BBIG. There's like 25 people in there that got to talk these penny stocks. There was some about the timing of a spinoff.
That wasn't even on the list, guys. All right, I can look it up, guys.
BBIG, not Big Joel. BBIG.
I skipped a B. Okay.
All right, let's go ahead. Let's take a look.
It's already off the highs. Okay, give us the news, and then I'll tell you what I think, and you already know what I think.
All right, so it wasn't earnings. Looks like we have some news in the Benzinga Pro. Looks like they're gaining on confirming distribution date with planned spin-off of blockchain business, Cryptide. So it looks like
blockchain.
Yeah, blockchain.
That's hot.
Getting mentioned.
Long Island iced tea.
Is it really hot right now, though?
Exactly.
Have we been seeing Bitcoin?
Exactly.
What happened to Bitcoin yesterday, guys?
I know. We jinxed it. We said it was holding up well, and I've been bearish Bitcoin forever. I was like, it's been holding up well.
Joe,
maybe we might get off the bear train, and then they just pulled the rug right out from under it.
That guy pointed
jinx right there.
Yeah, that guy pointed it out to us on Twitter. I appreciate that. I'm not sure who it was.
This BBIG has been a sell every time it's popped up. This is a social media darling, pumped by multiple social media accounts. I would sell all rallies in this thing. Can it continue to squeeze shorts? Sure, for a day, but when the dust settles, the shorts usually win. So when your stock pops 30% on some headline to confirm a distribution date, it's already way off the highs, got to 420. That's the recipe for me to sell. Just my opinion. Don't hate me. I don't like the stock.
Support at 270. That does give you the upside. You had multiple highs at that area. So if you are shorting it, you're looking for it to come in 270.
Shorting is evil, Joel. Shorting is evil. They're going to get the shorts. They're going to get them. That's what they want to do. They want to get the shorts. Get the shorts. Get the shorts.
Bitcoin, man. Look at this. It's down 5 1/4 here. Do we got a little date with this one here?
34,395 break, and 20K is standing out to me there. I've talked about it before. I said I was going to be patient. If we go down underneath 30, I'm going to start dipping my toes because I
don't even know. You know what I was thinking of doing? Jeremy talks about the dollar cost averaging, and I was thinking of just putting an amount in there, doing it, and then that was at 55K. So
glad you didn't do that.
Glad you didn't do that one, Joel.
Yeah, and I actually it actually made it to the investment committee, and investment committee was kind of lukewarm on it. She said, I really don't understand what it is, and I'm like, okay, I'll wait. So we'll see. But the next daily support level, basis the futures. Comes in at 34. Let's call it 34.4 in the future. So I'm gonna hop on with Sean Udall, and he's all fired up.
It looks awful, that Bitcoin chart.
Yeah.
I've been saying it's been holding 38,000. It broke support. This is a tech stock. It's going to trade as a tech stock. It's been unbelievable how much it has held up. I've been predicting the crypto crash for a long time here now. It's somewhat come because I was saying it at 50,000, but I mean, it's held up very well, and I'm impressed how much it has held up. I still think it eventually breaks. I sold all my Ethereum. I sold that. I actually sold the last of it just a little while ago. It was a great trade. I was in at 2,200. I got rid of half of it. I think 4,000, and then it was an ETF equivalent. And then I sold the rest of it just a few days ago. So I have no more Ethereum. I have a very small position in Bitcoin, and I'm talking, it's not 1% of my portfolio. It's like 0.1% of my portfolio. So I'm like, this is speculative. It is just digits in a computer screen. There's no cash flows to analyze. There's nothing. And then they're killing stuff like that this year. So I'm very impressed that Bitcoin has held up as well as it has. I do think eventually it succumbs to the selling pressure. I do think eventually we're going under 30,000. I do think eventually we could even go under that. But Jeremy was on our show yesterday, and he thinks 100,000 before 30,000. Maybe I should take that bet with him.
I would take that bet right now. Honestly, I'm
we got to bring it back.
I'd take it right now. But my idea is,
I think you got to buy. If you're buying real things. I mean, Bitcoin is just numbers. That's what it is. It's digits on a computer screen, and it's got value because it's got perceived value because other people believe it has value. I can see the whole thing like government controlling, and we can get around the government control. But I also see a major problem with hacking. There's there's multiple people. Kid Dynamite on Twitter, if you follow him, smart person, got hacked and got his Bitcoin out. I mean, there is ways that they figure it out, and I like to know that my money is safe. If they steal my money out of my bank is going to be liable for it. If they steal my crypto out of my crypto account, we know what happens. Your money is just gone. I like to know that at least my bank's got my back. So there's actually a purpose to banks.
Yeah, we'll see what
Dollars
happens.
are not worse. Dollars are not worse because if I keep my dollars in my bank and somebody hacks the bank and steals my money, I have insurance for that.
Yeah, I think there's waves to the Bitcoin game. We've seen it, right? Waves up, it went to 20, then went back down, then went to like 60. Could come back down to like, I don't know, maybe somewhere between 30 and 20, and then eventually comes right back up.
Who knows?
There's
Though? Maybe
waves
it doesn't
to the
come
game.
back, Mitch. Maybe
waves
it doesn't.
To the game.
It's impossible to predict the path of Bitcoin.
I do see upside long term just because of what blockchain comes into play. Because that technology
isn't blockchain overrated.
No, it's
like
not,
all
Dennis.
we've heard about is blockchain.
Dennis, I could get on this conversation with you. We're gonna have a discussion about this.
Okay.
And we'll have a deeper talk. But I can tell you right now, when your bank completely changes over all their technology
to Bitcoin,
there might be something there's a competitive advantage there.
I don't think my bank's gonna change over to Bitcoin anytime soon.
They're gonna change over to at least ledgers and blockchain.
Yeah, but what is that? How does that help Bitcoin? Just because they steal their technology? How does that help Bitcoin?
It starts the changing of the way that transactions are recorded, and in the long run, that's just gonna go into the chains, right? Into the coins, whether it be Bitcoin only, it could be something else. It doesn't mean it needs to be Bitcoin, but is the technology leaning towards that side? And I think yes, but
I better stop talking. They all hate me in the chat here. I speak what I think. Sometimes I'm right, sometimes I'm wrong.
Hey, we just got to be real.
And I like real stuff, and I don't see crypto as real stuff. That's why I stick with real stuff. So just my opinion. Everybody's entitled to their opinion. You got to have somebody sell you your Bitcoin, right? So I sold my Bitcoin at 45,000. If it goes to 100,000, somebody's going to make money off me. So if you're bullish Bitcoin, you want the bears out there so you can buy it from them.
Yeah, that's what I want right now,
man. So stop hating me for selling it to you. If you're right, you're right.
We'll see what happens, guys. Like always, there's always two sides to the coin. We'll see you later, Dennis. Have a great weekend, man.
Thanks, buddy.
Enjoy it. All right, guys, we're going to go ahead and wrap on up. We're going to bring you to live trading. No all access today, guys. Yes, we got live trading, so don't go anywhere. Come join Zunaid, Ryan, and I as we go ahead and trade. I'm sure YOLO Zunaid is going to be ready for Friday. I mean, come on. This is the day of the days. Let's go ahead. Let's see what's going on out there. I know a lot of people got wiped out probably on their calls yesterday. So there's going to be a lot of action, I think, in the option world. Come tune in with us on live trading. We'll see you next time. I'm sorry I wasn't able to get to all the topics today. So many earnings. We'll cover MP and some other kind of earning stocks on live trading. And if you guys got anything you want to talk about, just come on over to live trading. We'll cover it there. See you next time, guys. Let's keep it going. Benzinga, baby. All right, traders, just give me 1 second. Just got to make sure that redirect is set for us to get us on over to live trading before I end this stream. There we go. We're all set. I'm out of